Hello, and welcome to today's KraneShares webinar, SaaS-Pocalypse, Humanoids, China AI, and Data Centers in Space. My name is Brendan Ahern. I'm the Chief Investment Officer here at KraneShares Exchange Traded Funds. I'm joined by my colleague, Senior Strategist, Derek Yan. Derek and I are very much looking forward to presenting some of the new trends we're seeing taking place, not just in China, but happening on a global basis. And just as the German Chancellor saw yesterday, after meeting President Xi in China, he traveled to the Unitree, which is a humanoid robotics manufacturer. The German Chancellor saw a demonstration of Unitree's robots. And I think there's nothing better than seeing, than believing. And maybe at the end of the webinar, we can try to pull up a video of that demonstration. It's very similar to what you saw the annual Chinese New Year gala that took place, where humanoid robots really demonstrated how far they've come along, not just in the last year, but really over the last several years. And we certainly believe that the infusion of AI is really the catalyst that's driving this adoption and this giant leap forward when thinking about humanoid robots, but certainly broader AI adoption. Now, for those of you less familiar with KraneShares, our founder, Jonathan Crane, moved to China in 2001, where he established a business geared to China's growing urban middle class. Living in Shanghai, Jonathan experienced firsthand how the adoption of mobile technologies, aided by China's continued urbanization, was creating this urban middle class that was driving new economic sectors. At the same time, coincidentally, 2001 was the first year a foreign investor was allowed to invest in China's onshore, the Shanghai, Shenzhen stock exchanges. After selling that business to a US multinational, Jonathan moved back to the United States, where he established KraneShares with his vision of providing exposure to new China thematics, as well as access into China's onshore market back in 2012, 2013, well in advance of MSCI's inclusion of Chinese onshore equities within their indices. And if you fast forward today, we have a suite of China growth ETFs. We're very well known for KWEB, our China Internet ETF, but we also have an EM version called KMQ. But we've also seen other growth opportunities in China, things like healthcare, China Clean Technology, China's Starboard, where many of these semiconductor stocks are listed, but also starting back in 2017, when we saw the adoption of electric vehicles in China, we thought that's a global phenomenon. So we listed cars back many years ago, but a lot of the trends we're seeing in terms of AI as well as humanoid robotics, we know these are global trends. So we want to provide investors exposure to global companies, not just US, not just China, really global exposure to this humanoid robotics, which we listed COID, as well as we have our AI play, AGIX, which I know Derek is excited to speak about. But I think, again, most importantly, we want to provide a data-driven, a factual perspective on what's happening, not just in China, but in these opportunity sets. And that's really the basis of today's webinar. Now on the next slide, this is something that I think investors really are starting to recognize, which is the concentration we've seen, particularly here in US equities. The proverbial Mag 7, or the top holdings, have made almost, you could argue, the other 493 stocks irrelevant. Now we're starting to see this broadening trade take place, and we think we're really only at the start of that. Now what's kind of interesting, if you step back, a lot of this concentration is not unique to the United States. That within Taiwan semiconductor represents 60% of MSCI Taiwan. In the case of South Korea, it's 33% Samsung, 20% SK Hynix. In the Netherlands, about half of MSCI Netherlands is in ASML. So while we think these are real opportunities in those companies, we also think there's other players that are being overlooked when you buy these broad-based EM or global indices that are becoming increasingly top-heavy to the Mag 7 or the proverbial global Mag 7. And that's a little bit we're going to talk about. Or obviously, these are great companies. You want to have exposure. We want to highlight some of the other opportunities on the next slide. Part of the reason why, just like here in the US, if you think about, yes, those companies are very important. We want to own them, but you can see that their earnings per share growth has not quite kept up to it. And if you think about what's happening in South Korea and Taiwan, think about the wealth effect happening in those economies because of the rise of TSMC, SK Hynix, and Samsung. And it's going to benefit the broader economy in a big way. But for investors, if you buy the South Korea ETF or the Taiwan ETF, you're basically really just buying a handful of stocks. You're really not getting some of the ancillary beneficiaries taking place. On the next slide, we see this from a performance standpoint of, yes, we do want to hold these names, but at the same time, part of what we're demonstrating here is that simply looking at that narrow version, if we go kind of overweight the subset of names beyond the kind of proverbial Mag 7, you can see it's been actually additive to performance. And we think again that it's most you're seeing this play out, spoken about the most here in the US. But again, stepping back, we think this is something that's going to play out overseas as well in non-US markets. On the next slide, Derek, one of the areas that we kind of touched on is this broadening of exposure, and certainly I think this is a great place to hand off because of your involvement really on our efforts on AI research, and certainly want to give you the opportunity to talk a little bit about this opportunity from a broadening.
Thank you, Brendan. Yeah, I think like a lot of investors have been thinking probably like same philosophy here. Like we have previously a lot of the AI, even like a lot of the AI focus or like investment is around the Mag 7 or namely like those hyperscalers. But like increasingly, we have been like looking at like more broad investment opportunity even within the AI because like you think about like hyperscalers, like I think there's like very capex intensive, but like think about like the potential for ROI, that's come like now a question mark from many investors. So, but like just beyond the hyperscalers, there's like tons of investment opportunities across the kind of like value chain, the different stacks of the AI, right? You have like semiconductors that really additive to NVIDIA, right? Like you have basically memory chips that's really, I think now become the new bottleneck. Then you have data centers in the cooling. On the energy side, there's a lot of energy carrying to the AI power. Then one of the, I think a lot of people miss in their portfolio is actually the models, the large language models, LLMs, like Anthropic, OpenAI, XAI. Those are where the innovation and value creation is happening. Unfortunately, they're on the private side, so a lot of investors traditionally don't have access to those. Then on the cloud side, besides the hyperscaler, you do have like a new wave of like a new clouds like CoreWeave, like TerraWolf. Those companies really now solving this bottleneck of like shortage of computing. Then you have a dozen of like applications companies that their business model likely to benefit from AI. So this is really multifaceted, and you have this like very diversified exposure to more AI beneficiaries beyond Max 7. So in the next page, I think like a lot of the investor now start to realize that like traditionally you think AI, which is like ChatGPT, right? Like it's really uh, just like consumer opportunity, right? So um, we look at this work differently when we kind of like launched the AGIX ETF back in 2024. We see the value creation of AI could heavily relies on the enterprise market because like AI is a very expensive game. You think about like the token consumption, like token is expensive as those chips and all those data centers, energies, right? So if you think about like using tons of tokens, you need the token to generate a lot of value. So far, we can see in the near term, the enterprise is where a lot of value can be generated, and they can pay more to the AI players. And we have seen this rising AI adoption among the enterprises to prove that like those enterprises, if you think about like they can automate their workflow, and actually seeing this like, kind of like adding a digital employee to their business so they can grow without adding like the kind of like human. That's kind of like one area we see a lot of enterprises growing. So across like the coding capability, a lot of like those code work, we're just like using the company's data to automate a lot of the workflow, the sales, and kind of like the company data is now driving a lot of decisions. So those things being really generating a lot of value. In the next page, you can see we have here like this narrative like AI is really destroy the software industry. Where every time the Anthropic publish a new function, there's like bunch of the software companies or just like many other industries even like got destroyed in the equity performance. We had this view actually over a year ago that the AI agent's gonna become the new software, right? So um, the idea is really not AI gonna replace all the softwares, but I think like AI is gonna replace some software that if their business model is just providing a single purpose tool, it's like basically like a UI. Those type of companies is very vulnerable, right? Those like kind of like superficial AI like software where even they're talking about like adding AI, they could be just disrupted because they're just like UI. But like if you think about like going forward, if software companies, those very established one who own the workflow, own the data, own the customer relationship, and all those like corporate approval layers, so those can be actually less vulnerable to the AI agent, right? So in fact, those companies likely to incorporate AI to their existing workflow, right? So that's kind of like where all those SaaS company is working towards. In the next page, I think one of the key for a lot of the SaaS company going forward is really changing their business model or just changing their pricing model more specifically. If you think about traditionally, SaaS company use this seat-based pricing model, right? They pay per user. But if you think about like incorporating AI in the future, you have to change it to kind of like the AI agent pricing or just like token pricing, or like how much value the AI should generate. That you have to pay with that value based. So it's kind of like this is a great transition right now. I think a lot of things happen like to traditional firms previously when they adopt the internet, when they transition their business model. This is kind of like the same for a lot of software company here. The narrative just like so negative right now. It's like investors like sell first before ask questions. That's just drive all the software down. We don't think that's kind of like a right thinking model for the long term because like certain SaaS companies definitely have some value by incorporating AI and transform their pricing model to more AI native. So in the next page, you kind of like see this like all those private large language models, like XAI, like Anthropic, their revenue has been growing exponentially just because naturally you think the AI is going to take a lot of value from the software side in the enterprise side, where they're going to become this agentic layer on top of the software, right? So in terms of like user interface, I think a lot of just like users, they just kind of one-shot prompt and create like a software for them, then that software are going to use actually the data from the traditional software companies, potentially just or just using those software to do the actual work. You probably have seen some like function like Clawbot or like I think Anthropic co-work is like a lot of similar things is happening around AI. That's why like we do see this is a long-term trend that's going to reshape a lot of business model going forward. So that's why you kind of like see where the value creation and innovation is happening around those private large language models. So in the next page, we kind of like see recently XAI and SpaceX did a merger. So in our AI, public and private AI ETF, AGX, we do own XAI in sort of like, I think like starting from last year. Now it automatically become SpaceX after this merger. So we actually now own SpaceX shares. I think like to be realistic, to this really benefiting XI more, given like to keep building this AI infrastructure. I think there's a lot of capital become demand where like SpaceX, they have a lot of money already with all those government contract. So just in the near term, this is more paved the way for the IPO that like XAI can just join together with SpaceX and access to the public capital market. And in the longer term, we do have this synergy that like you have space, you have launching capability, you have satellite network, you have this data center in the space. But that's more on the long term when this synergy going to be more clear going forward. So in the next page, you can see that we already mentioned this for investors, like if you invest in traditional index or public equity ETF, it's really hard to get access to those private AI companies. But just like given their size right now, you think about like Anthropic's like 380 billion and SpaceX is like over a trillion. That's kind of like a size you would go IPO actually already, right? Like think about like previous like maybe like 10, 20 years ago, those companies will be top 10 in the S&P 500. You already own this. But now, because there's so many capital on the private space, and those companies can just stay in private for longer. So actually, investor missed out a lot of the value creation, a lot of innovation happening. Even those companies are already like hundreds of billions to trillions. So that's the very different market today. That's like just require the investor to think differently when it comes to invest in both public and private. So in the next page, you kind of like see this is we already talked a lot about like the broadening in the digital AI space. So another trend, another emerging uh, universe of the AI investment is really happening in the real world, right? So one of the most important trend we notice is physical AI, right? So the physical AI really happened because of digital AI, right? We have now the same way to train the AI models using the images that the robot can sense, the proximity data that all the sensors can get, or just like they have like synthetic world model that they can operate. So that all those nuances created a possibility that the robotic can just like sense, can see, can reason, and can make actions autonomously. Can be just like this like multiple purpose generalized like vehicle, right? So you think about like traditionally, the robotic or just like the robotic ETF or robotic index has been there for like 10, 20 years, right? So investors already know this, but like that's kind of like the old definition of robotics, right? If you think about traditionally, it's really automation, single purpose, like industrial arm. So those things are already adopted by factories and now slowing down. But the last mile of automation is just like you still need a lot of like human labor to move things around, like in warehouses, monitoring, right, sorting. So a lot of those things are still like really hard to automate. So the business owners like now realize this is the chance. Actually, now with this AI, with this like really smart um, uh, robotic models, you can incorporate that in a lot of the physical places to finish that last mile automation. So in the next page, you can see with that, this is like a great demand. If you think about like the aging population and labor shortage problem, Morgan Stanley think by 2050, we could see like a billion unit of humanoid running around us, right? That's kind of like one intense human, like this. Well, I think like Elon Musk give like more aggressive projection that like one human you should have owns like three robots. That's kind of like a lot, but this you can see this direction, right? This trend is obvious. Like this, if we think about like humanoid or just robotics to do all kinds of automation work, this is something I would think bigger than auto market, bigger than electric vehicle, bigger than drones. This is the next phase of I think a huge industry that's rising. So in the next page, you can see where those applications can be from, right? So currently, I think a lot of factories like BMW, BYD is testing using humanoid in the assembly line. I think that's also the plan for Elon Musk for Tesla. Then you have a lot of warehouses going to use a lot of automation tool. That's really embodied intelligence. In the service sector, I think that's another big demand because the rising cost in the hospital, nursing home, a lot of like restaurants, a lot of deliveries, a lot of like hotels. You kind of like see this like huge demand for robotics. And there's finally, I think there's company trying to fill the home market where the humanoid potentially can do your dishes, could do your laundry. That's kind of like a dream for a lot of people. So yeah, I know you hate laundry, but yeah, Brandon. So I guess like yeah, that's kind of like we can like see this broadening, and a lot of people talked about now. It's not only the AI and also the physical AI. It's not only in the U.S. right? It's really going global. So now, like Brandon, maybe you in the next page you wanna talk a little bit about like where this kind of like the opportunities outside the US.
Yeah, I think one of the areas that, this and I think generally we disagree with the notion that this is a race, that there's a winner and there's a loser because I think different countries, different even different states, different cities are going to adopt this technology at different rates. There might be countries or states that reject it. And so I think in general we disagree with this idea of it's a race. At the same time, one of the things that we are seeing from the China perspective is that the long run investment in clean technology is paying a very strong reward because electricity costs in China are so much less than in other developed countries that this investment in not it includes obviously solar and wind, but also hydro. China's famous for its Three Gorges Dam, and there's a construction on this new dam in Western China that will be many times bigger than the Three Gorges Dam, but then also in nuclear. That today actually the United States produces more nuclear electricity than China, but China is building dozens of new reactors where I don't believe there's a singular. There's talking about unmothballing a few. So the net is that the demand to power these data centers is simply cheaper in China, which means that their cloud computing costs are going to be less. And so again, we think this is a underestimated element to the China clean technology push that's been playing out over many years. And then unintended consequences, if you want a proverbial call it a race, well, that race has been won because of these cheaper electricity costs. At the same time, I think another element from the China perspective on the next slide really is that that China has been investing in STEM education for decades. That you can't argue. I was thinking about, BYD made its transition from a cell phone battery maker to a electric vehicle company back in 2009. It predated Tesla for many years. And when you visit the BYD headquarters in Shenzhen, they've this giant wall of all of the patents and all of the scientists and engineers. And I think you're seeing the seeds of this investment in STEM education, science, technology, engineering, and math are coming to fruition. And I read that, China graduates, I think it's about 5 million, 6 million STEM college graduates a year. And that's been happening not just for several years, it's been happening for decades. And so that the output is we have these very strong engineers and scientists, and it's not a uniquely American trait. And that's why this gap has been closing very quickly. And on the next slide, almost on a daily basis, we're seeing that the China AI large language models are catching up very rapidly. I was reading just yesterday that Alibaba's QN large language model, that they've increased their market share from the beginning to the end of 2025 from 17 to 34% within China. Just an amazing leapfrogging forward. And so again, you know, you're seeing this rapid adoption. And again, I think this is something it's happening on a global basis. It truly is a global phenomenon. And again, we see this happening now. For many investors on the next slide, I think where 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 the U.S. Has kind of dominated these headlines has been what kind of change investors' perspective was the DeepSeek moment in January of 2025. Now we would argue that this the rebound in Chinese equities started back in January of 2024, and it's been a volatile ride as we're experiencing at the moment. But I think DeepSeek really put the China AI on the map, and we've seen that proverbial baton being handed to a number of technology companies that, as investors in the space, we've known for many years. Companies like Alibaba, Tencent, more recently, this company Kuashu, a Kuashu does it's like a TikTok, but it actually has this. It's called Kling AI, where you can use Kling AI to create your own AI videos. I mean, it's just amazing technology from a company that actually didn't even exist a few years ago. And I think again, this is something that we're seeing on the next slide is different. And in the U.S., you have it to Derek's point. You have it's an enterprise solution that companies like Anthropic and OpenAI and Palantir, they go to companies, and in the case of Palantir, they kind of use the military term that they embed themselves, right? They kind of go into a company and work with management to utilize their technology on an enterprise solution. Now, obviously, there is a large language model that, obviously, and in the case of Chat GPT, there's 800 million users, but the real monetization model for OpenAI is not charging people $5 a month for Chat GPT. It's that enterprise solution. And certainly on the U.S. side, as many of these companies, less obviously not Palantir, but why are they staying private? Is because they're burning a lot of cash in this effort to displace, to Derek's point, the software companies. So they're charging less in order to be a disruptor to garner market share. And that's very different from what we're seeing from the China side. And on the China side, we're seeing uh, the companies are really giving away that large language model, Alibaba's QN or Badu's Ernie Bot. You see that is open source, and the monetization model is actually coming from the cloud computing. And so it's not that one model, one effort is better or worse than another. I would just say that they're just simply different. Time will tell if one model plays out to be better or not, but it almost lends itself why investors should want to hold both because maybe one is better than the other, right? I don't think we can predict that yet. But what we are seeing on the next slide, and I was just very much demonstrated today was we had Baidu report after the Hong Kong close their Q4 and fiscal year 2025 results. And I know the market, the stock is off, um, and some of the headlines look less than positive, but Baidu management did some very shareholder friendly things. They're going to pay a dividend, $5 billion to investors. They're going to continue with their stock buyback program. They're actually going to spin off their AI chip unit, a firm called Kunlun, via a Hong Kong IPO. Very shareholder friendly efforts. But I thought what was interesting is Badu's co-founder and CEO Robin Liu announced that basically said search is dead. That he announced that AI is Badu's new core. That historically they've always called search their core. And why is that? Well, because their AI efforts grew 47% year over year in 2025, that in RMB they went from 27 billion to 40 billion in revenue from AI initiatives. That includes the cloud being driven by their Ernie bot, but also Apollo Go, their robo taxi, and 39% uh, that that the revenue from this AI effort went from 26 to 39% of their revenue. And so it just shows that this technology is disruptive, but companies are capitalizing, and I would argue that Baidu again is making that transition, and certainly over the next week or so, we're going to see companies like Alibaba and Tencent and Kuashu opine on this as well. So it's again, the market is not, kind of not bidding up Baidu, but I'm taking I'm actually quite constructive for whatever it's worth. On the next slide, I think we see, Derek, a number of real implications taking place today, and again, we see this as something that it's going to broaden out. There's going to be more opportunities. There's going to be winners and losers, which is why a diversified approach is an intuitive approach, and there's not going to be one winner. That's from a corporate as well as a geographical perspective. These are global trends taking place, and certainly something that we see taking place. Um, for us as investors, we really do see this as a multitude of opportunities. And Derek, I know AGIX is an ETF that you've been very involved in. On the next slide, um, it's probably worth just talking a little bit, just briefly about what is AGIX? Why did we create this ETF?
Yeah, thank you, Brandon. So, well, we launched AGX in July 2024 to create a whole benchmark, not only have the public equity in the AI space, but also include some of the most innovative private AI companies, namely those large language models, right? So the idea back then is like, yeah, like we want to invest in AI. What's the company that most investor would naturally think you should have, right? So those like say OpenAI, Anthropic, XAI, those companies like they are kind of like at the core of this ecosystem, right? So if you think have the owning the ecosystem without owning the kind of like the core companies, you're missing a lot of the value creation. So that's why we started to partner with our subadvisor, Atta Capital Management. So they are early investor into the Anthropic, XAI, Perplexity, so those kind of like AI native companies and large language models. So that's we can actually using AGIX to invest directly to those companies. So we have a direct relationship with Anthropic. We work with their finance team, so invest in their CSE round of financing. So AGX actually become a shareholder for the company, sit on the cap table. So that's like a great innovation, I would think, for ETF because like traditionally you only get access through private funds, so there's some lockup, there's like layers of fee. But AGX is a daily liquid ETF open-end fund, right? So with like some exposure to the private. So SEC actually allowed a 40 Act fund like ETF to own up to 15% into the private. So actually, then I think most investors to have like 10 to 15% as like decent allocation to the private. So we fair value those private position in the ETF daily with our daily fair value committee to actually we use the primary round valuation. Then between the primary round valuation, we look at like secondary market transaction data from our data vendors, so we can have a fair value every day actually for the private holdings in the daily liquidity ETF. So that's kind of like the AGX background is a lot of information, it's a lot of innovation. So now we hold XAI, now automatically become the SpaceX shares, and also we invest in Anthropic shares in the ETF. Right, so next page, this is another fund kind of like we think can be the next trend that a lot of investors haven't really recognized is really this humanoid and also embodied intelligence, right? So you think about like humanoid, there's an ecosystem, there's integrators like Rainbow Robotics, like UBTech, those companies like building, assembling the humanoid. Then you have the brain where the technology company providing the models, intelligence, chips. And also then you have the body where we think that's the majority of the opportunity where the company providing the components being the supply chain for the humanoid, right? The company providing actuators, models, bearings, reducers, encoders, sensors, critical materials like rare earths. So those companies represent like a broader industries, mostly like in industrial or just like those consumer discretionary, like very diversified additive to the digital AI, which happen mostly in the technology sector. So this is kind of like we think more like physical real world AI play that can be very additive and complementary to the traditional like tech exposure people already have. Yeah, so in the next page, I know KMQ is Brandon's favorite fund for many years. Yeah, Brandon, you want to maybe introduce a little bit of the ETF?
Well, I think we're very well known for KWeb, our China Internet ETF, and certainly the roots of our firm and such a focus for us has been on the China side. At the same time, not all investors have a China bucket. So we literally created KEMQ in order to take the K-Web thesis and apply it to broader emerging markets. And certainly, it holds. We talked a lot about SK Hynix and Taiwan Semi. Certainly, it includes the K-Web names, but we certainly have a very global EM focus, just for the investors looking for kind of I call it a growth factor for emerging markets. KMQ, it could be of consideration. On the next slide, obviously, our flagship fund that we launched a year before Alibaba and JD went public back in 2013, our China Internet ETF, KWeb. We're very excited for the Q3 earnings, or I'm sorry, Q4 earnings coming out over the next 2 weeks, because we really do believe that this re-rating of Chinese equities, and it's been a volatile ride and will continue to do so. But we really do believe that re-rating can take place, particularly in light of President Trump's upcoming March visit. But also we have some very important government economic meetings take place starting next Wednesday in China. They're the dual sessions, which will see the ratification of the 15th five-year plan, which we know domestic consumption and technology self-reliance are the two most important points. So we really do believe that KWeb is uniquely positioned to take advantage. And then we have several, we'll kind of go through several of our compliance slides. For those of you joining us, and if you have your CFP, SEMA, or CPD designations, please email at ce@KraneShares.com. That is Charlie Edward at KraneShares.com, and you can get a hour of continuing ed credits. For those of you, if you have a question and you're joining us on KraneShares.com, please email us at info@KraneShares. If you're joining us on the Zoom link, please use your Q&A function, and I will direct all very difficult questions to Derek and handle the easy ones myself.
Good.
Derek, one thing that I've been thinking about, and I'm a little bit older than you, but there's a great movie called Mad Max. And whenever Mad Max was being chased by his foes, his opponents, he would reach down and open the nitrous oxide, and his car would go from going fast to this hyper speed. And I was thinking about that the AI element to humanoid robots. I really think the AI is the nitrous oxide for the adoption for this movement of taking what's basically a remote control car and turning it into a viable economic tool for humanoid robotics. It is the AI. And I know you had a trip not too long ago where you visited a number of these humanoid robotics makers in China. Like I mentioned, the German chancellor visited Unitree today in China. They put on an incredible demonstration for him. But what's your take? I mean, how do you think this AI has changed? Is going to accelerate this adoption of humanoid robotics? With or without it, have you thought about, is it
Mhm.
is it years? Is it a decade?
Yeah, definitely, Brandon. I mean, so if you look at where AI is helping the robotics right now, you already have seen very useful commercialization happening in the quadruped, right? Where they can do a lot of saving the life of firefighters, right? That's for real. In many, many other use cases, we have seen orders of those rising. So with that, you kind of see this AI is really accelerating a lot of use cases for those robotics, right? So I think one thing we noticed it take probably like 7 years for autonomous driving to happen, right? Like, but if you talk to the same like AI researchers that's doing the research on autonomous driving, now they feel like you only need like 1 or 2 years to achieve the same speed of development in the current stage of the AI deployment into the robotics, in the humanoid, in the quadruped, and so many end-to-end optimization and the training, because the way of training AI, or like if you think about like previously, it's more like solving engineering problem, right? So that's kind of like the optimization. But now it's really the large language models type of training, right? So if you have like a massive amount of data that can be used for the training, and this like new way of thinking, this neural network just accelerate all kinds of research on this space. So if you talk to the researchers, their opinion is like the speed to deploy, to train those physical AI model is so much faster compared to, say, even 5 years ago. So that's kind of like a game changer right now to really accelerate the whole humanoid and embodied AI space.
And where's I think one approach we took with Coid in developing the index methodology was to have this diversified ecosystem effect that but where do you see the margins across that ecosystem? Is it the end output provider, or is it the tech? Is it the industrial manufacturer? How do you
Mhm.
kind of view that?
Yeah, I think we're on the kind of like the kind of like the kind of like the early stage of mass production, right? Think about like Elon Musk is projecting like a million unit by 2027 or just like a billion unit 2050. But we're like kind of like just like handful, right? So I think right now, if you have a breakthrough in the model of robotics, this mass deployment of like BMW says like, oh, once it's 99% good, we're gonna do mass deployment of the factories. Once you have that, what is the bottleneck? You have to think that, right? So currently, the cost of humanoids is very expensive because a lot of the actuators are needed, a lot of those components like motors, those bearings. So that's kind of like current bottleneck. If you think about this industry going to be so scalable, we need a lot of those. And those are really controlled by a handful of companies globally. Their global market share is quite high. So you would think their margin likely to be expanded when there's shortage, right? Similar to the idea of NVIDIA and many chips when there's build out data centers for digital AI. When you think about the massive build out of humanoid and all those quadruped and those smart robotics, you're going to need a lot of those components, which are the bottleneck.
Hmm.
I think those companies can be higher margin going forward.
And the index Coid's index methodology takes an equal weight approach, and um, you know, the question would be why that approach? And I think simply that in a developing technology, it's hard to say this is the exact winner. Um, and that's across that ecosystem. And I just wasn't sure if there's anything you kind of thought um, that you would maybe add to why take an
Sure.
equal weight approach.
Yeah, I think like this is like a lot of discussion around this like methodology because like this is kind of like early stage when you think about like when the humanoid space, right? Like the integrators, there's so many brands out there. There's so many like kind of like private, like a lot of brands in the private space, public space, trying to like now fighting to be the next iPhone, right? Be the next like Samsung phone, or just then for like cars, be Tesla, right? So that competition is so early, so dynamic. It's really hard to bet on the few winners right now at this stage. But we can like see there's more certainty around the ecosystem where the chips, the technology, the models, the body, those components gonna be the likely be the bottleneck. So that's why being more diversified and capture value across the where the certainty going to happen at this stage, early stage, makes more sense to be more diversified. Then maybe in the future when this is like few leaders going to come out and you have like see this clear trend of like handful of names can dominate, then maybe we can actually adopt like different way, change our methodology going forward. So that's kind of like the thinking, I think, for this eco-weight methodology.
Okay, okay. And in terms of end users of humanoid robotics, are there, are there industries that you think are kind of first movers? Certainly, I think not just humanoid robotics, but the, AI-enabled quadrupeds, the proverbial dog. I mean, there's a whole host of security. And by security, I don't just mean like, preventing a robber. I mean, just, as people get older and they want to live alone, potentially they could fall and, could a humanoid robot or quadruped notify, call 911, So I think that's to me just the demographic opportunity. From an industrial perspective, I know you touched on Amazon's adoption of humanoids within their factories. I think you're starting to see that a little bit on the, obviously automotive's always had a very industrial robotics, but you're starting to see a little bit of a transition to humanoid robotics. Are there other industries that you view? You kind of mentioned firefighting. I know that that's an application we've spoken about in the past.
Yeah, I think like industrial and like factories, those last mile automation definitely like now is kind of like a place for mass adoption. In Asia, we have seen this trend of like, in the service sector, right, where restaurants, hotels, and a lot of those places like starting to use more robots for like especially for humanoid. That's like like people friendly. Then you can have this like really interaction. So those are places that can be just like the first stage. Then I think like now you have to let it be more smarter and then be more like safer to like redeploy at a home, right? I think like handling our home and with like baby that would be extra careful. So yeah, so there's like a stage of adoption that like we can just think like human running around in the future, like near our home. So that's kind of like not science fiction, but I think like it's really gonna happen, similar to what like electric vehicle, autonomous driving, those all that.
Okay, and then maybe we'll pivot to some, we've got a whole host of questions on AGIX, Derek. In terms of, the sector breakdown, um, as well as the contributors to performance, how does that look relative maybe to the NASDAQ 100 and, how additive have these private companies been?
Yeah, so I think like we have quite low overlap. Generally, I think they like versus the Nasdaq, about like 50% of the portfolio is are not in the Nasdaq, right? So that like especially like the private names we have, like say XAI, Anthropic, and many other companies are really created more like a diversified allocation to the broader set of AI opportunity. So in terms of the allocation, this is gigs agnostic, but like more focused on the actual category of the AI, right? Think about the chips, the infra, and also application side. So this is kind of like a more AI native approach towards investing in the AI. So it's very different, but like this is also dynamic. The allocation for the hardwares and infrastructure and the application can be dynamic, given that the value creation can be migrated or just like the narrative can change, can shift. But the idea is simple, is really finding the companies that's ready for the AI. So in the long run, this ecosystem is kind of like capture the most value from this structural trend.
And I know obviously, our XAI position has rolled into SpaceX, which is, there's talk, there's chatter about a potential IPO, um, which would be very interesting, and yeah, it just makes you have to wonder, does even SpaceX and get merged in back into Tesla? It's hard to say, but Anthropic is maybe a company not as familiar as say like an OpenAI. But maybe it'd probably be worthwhile. Can you kind of give a little bit of an overview of Anthropic and maybe also just your opinion on how big of a threat is an Anthropic to some of these software companies?
Sure. Yeah, you kind of like see Anthropic take a very different approach from OpenAI, where Anthropic is really focused on certain function, right? One is coding. Coding is probably the most valuable function right now, given that the AI agents likely to use coding as kind of like their way of doing things going forward, right? So that's a lot of like, and also like software engineer, the salaries were expensive. You think about the hiring. So for a lot of tech companies going forward, without adding a lot of headcounts, they can actually grow their business tremendously using the AI to code. Actually, then the Anthropic using the AI coding developed their code work. So actually now this whole agentic solutions coming from Anthropic can be just very fast published because their efficiency of AI coding. But now this like agentic functions that killing all those like different sectors of the softwares, right? Like in even insurance and like cybersecurities and those industries has been heavily disrupted because this narrative that like, oh, company can just use Anthropic or just those AI like agentic solution to create their own software, right? So the narrative is so strong right now that people just sell. But we do think now you can see the trend shift a little bit when Anthropic actually now announced more partnership with software company. So it's for some big organization, it's just so hard for them to say, I'm going to just create my software to do everything when you have layers of reporting, you have like different roles doing different things on different territory, on different data. So those things are not really easily just to use AI to finish as like a one simple solution. Those being like years of data workflows and integration with the company. I would say like those companies are likely to use Anthropic's functions within their like existing workflow and ecosystem to further benefit the company, right? To I would think do this transition from charging the company per user to charging the company by digital employee or just economic output they bring to the company going forward. So that's why a lot of companies actually can be just like their performance just driven by narrative, but like actually mispriced in the long term. So that's kind of like our thesis for this um, dynamic, but like this disrupting the software, but not killing the software.
Yeah, I think that goes back to, I was thinking about, Waymo has had a lot of success, and when you visit San Francisco, they're all over the place. But Uber was founded in San Francisco. There was no cabs, and then that transition from Uber to robotaxi is a natural one, and certainly for the city of San Francisco, Google probably has a lot of political influence, but I think it would be much harder for them to get approval for Waymos here in New York City, where the local taxi limousine commission, prevented there's no railroad from New York City to JFK, the big, major airport, or even Newark. You have to get off a train and switch to a monorail. And so I think that just shows that, local politicians are ultimately beholden to their voters, and if those voters are potentially being disrupted in a negative way from AI or related to they're going to find ways to tap the brakes there, and I think you'll see that in this robo-taxi trend. That I don't think it'll be universally adopted in every city just because there's a strong local contingent that will fight it. And I think that's potentially applicable with other AI. You can't pull the Band-Aid. It's you're going to see potentially a more incremental adoption. And then just around Derek, how additive? I mean, I don't want to put you on the spot here, but how additive have these non-publicly traded positions been for us from a performance?
Yeah, just let me open the Bloomberg right now. Actually, I can. We have an index called Selective Artificial General Intelligence Index for our public equity portion. So, like currently, as of yesterday, AGX actually outperformed this index by 8.4%.
Oh,
So
there you go.
those, yeah, those outperformance majority attributed to the private holdings we have. Imagine we have investing Anthropic at 61.5 billion valuation today, there's 380 billion. So that's almost like 6x, right? So that's kind of like, yeah, so adding a lot of value to the like performance of AGX compared to the pure public equity benchmark.
hmm Okay. And maybe just transition. We're getting a few questions just around kind of China. Um, it's interesting. Yeah, I think one area where we've there's so much excitement around what's happening in with TSMC, SK Hynix, and Samsung, but within the China, we're seeing some of that play out with the Starboard, where the Starboard was developed. It's kind of like China's Nasdaq. It's in onshore China, and we're seeing companies, a number of companies in the semiconductor space go public on the Starboard. And today's just a great example of those stocks were actually up. So we kind of see in the short term the excitement, investor enthusiasm for these kind of AI, call it infrastructure plays like a TSMC or SK Hynix, which we hold in KMQ. In China, we're seeing it play out a little bit with some of the Starboard, where about a third of the fund is invested in semiconductors, and so that side is held up a little bit better than this offshore market, where we're seeing, say a K-Web. But I think, mentioning just Badu and Waymo, Waymo's recent round, where they raised about $12 billion, valued at over $100 billion, which is twice the market cap of Badu. I mean, I just think, as we see this kind of shoot first mentality on U.S. software names, arguably, I think investors are kind of maybe shooting first on just trying to get into some of the infrastructure side, and they're ignoring, companies like Badu and others that, I think are benefiting from AI in a significant way. Our old friend Jim, yes, you're seeing the onshore Starboard hold up a bit better. KBA is another more focused on, it's held up a bit better than this offshore market that K-Web invests in, that it's mainly foreign investors' definition of China, and that focus is really on really TSMC, SK Hynix, and Samsung right now. You could argue the rest of Asia is just being ignored, which we definitely do believe that this EM domestic consumption story is alive and well. It's just in the short run, this is what's garnering attention, and yeah, it's just been kind of an interesting. I know, Derek. We're just past the hour. I know you're bouncing around Asia on behalf of the firm, and I know you've got meetings tomorrow, but so we want to make sure you get a good night's sleep.
Thank
Uh,
you, Brandon. Yeah.
but certainly appreciate you staying up late and looking forward to you got another week in Asia next week, headed back to kind of the China. But yeah, really looking forward to connecting once you get back. And certainly, if you wake up tomorrow, have further questions, don't ever hesitate to email at info@kraneshares.com. And again, certainly for those looking for a CFP, SEMA, or CPD, please email us at Charlie Edward, that's CE@kraneshares.com. And certainly for those looking for today's presentation, again, you can please email us at info@kraneshares.com, and looking forward to connecting. Thanks again.